The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien filling in for Steve. Steve's a little under the weather. He is growling and prowling out there, so he will get back ASAP. Market-wise out here, what we have is this. You get, well, you know what's great is that starting off with that hockey clip. Because bottom line, folks, hockey is back. Thank God for small and big miracles. Right now, we get the S&P futures are off 2.5. You get NASDAQ off 4. Gold's down 380. We get oil flat. Bonds are up 5 ticks. King dollar is up 10 ticks right now. And if we take a look at this market, and we'll go right back to last week, this is what you have happening. So, cash S&P 1466. What you'll see out here this morning, and now that closed over the highs. That's the bottom line. No juice whatsoever. We'll see how it comes back inside the 1462 this morning, because that's how this baby wants to shake out right now. Now, NASDAQ, the NASDAQ, folks, is the number to keep your eye on. Well, keep your eye on all of them, but the divergence is in the NASDAQ, and this is what it is. NASDAQ went sideways after a huge gap up, of course, last Tuesday, Wednesday morning. Bottom line is that the NASDAQ also is so far off its highs. The NASDAQ has been the weakest index on the way up. Then what do we get on last Friday with a low volume day? What you got is that you got Apple coming downtown once again with volume expanding. Now, Apple had closed, folks, at 527. Bottom line, an open at 521. It is going to go after its swing point of 509 again. So you have the swing point of 509 from last Monday. Then you have the 3 separate swings that it's held each and every time. So it's going to be, now what you're going to look for is this. If there's any expansion of volume whatsoever, it's going to be a problem for Apple. Doesn't mean it's going to break down at this particular point, but it's the cause building that it does want to break down. And when I say expansion of volume, if you do any place near 25 to 27 million shares, that is saying, hey, that is putting a dent in that bottom, and it just keeps hammering it. And, the take there is that if that's what you get, what you're going to see is that will blow out that bottom. Okay, gold. Gold out here, this is what we have with gold. Now, what gold had done is this. Gold, last Friday, went after the swing point, and it was way too much volume. We went after that swing point, and actually at 6:30 in the morning, because I was up, it already had 93,000 contracts, which is insane. Bottom line, you only have 70,000 right now. We got down to the 1926 area. Well, gold was up this morning. We had gold as high as $16.63. Right now, it's off $18. Well, it's down $2.90, but it's off that high. It's at $16.45. That, folks, is going right after this swing point again. That's how this is set up right now. That swing point is going to get tested. The real key is going to be how far can it get down there today in correlation to that swing point. We'll see. I suspect it doesn't have enough juice to get down there today. Why? It's just waking up. But bottom line is that from highs to lows, it's pretty dramatic. Bond market. What we did with the bond market out here is this. Bonds on the daily and on the weekly rejected the September 14th swing points on lighter volume, right across the board. We came into that area, came in hard, rejected it. We'll see what kind of juice bonds can get now going topside. Absolute classic, though. There's no two ways about it. The way that came into it was classic. The way it rejected it, it just wasn't there. So we'll see how this whole baby shakes out. We go and we take a look at Google. What we have with Google is this. The reason we're looking at Google is that what Google had done on Friday, folks, is this. It went after Well, first off, Google had come down so hard it was amazing. Okay, so Google had gone from a price point of $7.59 to $6.76. In basically in one day. We did that with 12 million shares. It comes topside the first time with 3.2 million shares. It tested that area on Friday with 2.7. That's probably going to be the test. And so the number on Google is 738.28. And if Google can't basically handle that with some juice this morning, what you'll see is that inside the NDX 100, that's going to basically put some pressure on it also. If we go over and we take a look at Microsoft, because inside the NDX 100 to me right now, see what Microsoft also did is this. Microsoft on Friday had an expansion of volume. It's the lower end of its range. Microsoft also wants to go after the swing point. We go look at Oracle. Oracle's at highs. Oracle's good looking stock. I suspect Oracle will stay up there. Amazon. And Amazon doesn't have the juice. So this is what you have with Amazon. Amazon's at 263 right now. Close at 259. That's going to go up and test that high. When we were testing that high on Friday, it couldn't handle it. So Amazon's going to be a big one to watch this morning. The reason it's going to be such a big one to watch is this, is that inside the NDX 100, we know Google's down. We know Apple's down. Apple's going to go after it. Google's flat. Oracle is flat to up. Microsoft wants to go down, and Amazon's going to be the number. Those are the 5 highest weighting structures inside the NDX 100. We go over, take a look at Asia last night. What happened with Asia last night? She had a mixed market. We had the Hang Seng flat. The Nikkei was off 0.8%. Taiwan was down to 0.6%. Over in Europe this morning, what you have is you get the FTSE down 0.3%. The DAX is off 0.5%. If we go take a look at that FTSE right now, this is what you have inside the FTSE. She came off the highs. We had that high out there, 6089. She's at 6066. She has a long way to go down, however, to get inside the lower range. The lower range for the FTSE is that 5932 area. We go over to the DAX. We take a look at the DAX in Germany. What we have in the DAX in Germany, she's going to be a little bit easier to get inside the range, but she still has a long way to go down. You get 2 separate ranges. We're at 7735, 7662. That's quite a way down, though. That's still quite a way down. Just to get inside one range. The lower range actually has to come down to 7,400. So you're talking some big numbers on the way down now to get that area. What we do have out here in the commodity market this morning is that commodities basically have a huge amount of pressure on them. You got copper down 0.8%, gasoline's off 0.4, crude's down 0.4, orange juice down 0.25%. The ones going topside, we have natural gas up 1.5%, coffee and sugar up 0.9%. But it's all going to hinge on this good old dollar. What we've had with the dollar is that she's fluctuated from going positive to going negative. What you do have, and this is pretty neat, I talk about these dollar bonds quite a bit, and the number, let's see, dollar Asian funds lift dollar bonds. Here it is here. Okay, so the in Asia alone, folks, okay, last year was the largest buying of dollar bonds in Asia, period. This just came out this morning. Investors in Asia are buying almost 2/3 of the new bonds denominated in U.S. dollars in the region, fueling record issuance as local wealth swells. So what this is all about is this. So picture this. This is not money managers buying them. Well, here, I'll give you the breakdown, because the breakdown is pretty cool. Regional money managers bought 61% of the dollar deals in Asia, excluding Japan last year as of November, about triple the amount bought by the U.S. or European investors, and up to 53% more of 2011. The growing prominence of local investors in the debt market mirrors the region's prosperity. Asia's economy may expand to 6.3%. Bottom line is that what you have is this, is that the demand for dollars, okay, dollar bond sales in Asia, excluding Japan, surged to $121 billion last year, 77% more than the previous high reached in 2010. Okay, so the way this works, folks, is this. Now, this is just Asia. what happens is that either the sovereign nations and or companies over in Asia, they're issuing dollar bonds. And when they issue a dollar bond, what ends up happening, number one, they need the dollars to issue it. They need the dollars to pay the interest, and they need the dollars to pay the principal. It puts demand under the U.S. dollar. That's what it does. And just in Asia, that was the largest one. What you have here, what this story is really about, is the fact that individuals are interested in buying U.S.-denominated debt. That's what it comes down to. And what you have there, my take on that is that they know that, number one, they're going to get their money back. They know that, number two, they're going to get paid in U.S. dollars. And that's the cooker in this whole baby, folks. That's how it works. Because specifically, that's just Asia. This is happening in South America. This is happening in Europe. And, of course, we know what happens in the United States because that's all we issue is dollar bonds. Well, that's not all we issue, but that is 99.9% of what we issue. You can issue whatever type of bond you like in any type of currency you like. What has happened is that across the world, more people are issuing dollar bonds. Why? Because the demand is there and the supply is not there. And so when you have a demand for it, guess what ends up happening? As they issue it, more people want the dollar goes up. That's what it comes down to. And that's exactly what you're going to have. Now, what I expect you're going to see out here this week, we had that huge day last Wednesday. Thursday, Friday goes sideways, which is a normal occurrence, folks, after you get it wasn't 5%, but between Monday and Wednesday, I think it was around 5%. That's a normal occurrence. You're going to learn more about how we come back inside. And it's going to be the NDX, I suspect, that's going to tell us, okay, it's a normal retracement that still wants to go up and hit the highs in the NDX 100. Because what indices like to do, okay, is this. They all like being in harmony, meaning that the S&Ps, well, the small caps already went over the high. The Dow is really close to it. The S&P is right next to it. So if the Dow wants to test the high and does it, and the S&P does, and we know that the small cap's already over it, what you'll see is that somehow, somewhere, the NASDAQ wants to do it. Now, my take is that it doesn't want to do it yet. We'll see how this pulls back. We pull back out here today, which we're going to do. On that pullback, if the volume expands whatsoever, what you'll see, the other indices will come off. They're all one big gang. That's what it comes down to. And they like being in harmony with each other. And what it's going to be all about, as it is each and every time, whether there's any fast moves in the marketplace, it's going to be about, can the dollar get any traction? That's what it comes down to. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the S&P futures right now off 3.5. NASDAQ futures are off 6.5. We have gold down 350. Platinum's off $7. We get oil flat. Bonds are up 5 ticks. And King Dollar is up 15 ticks. We're going to be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tom O'Brien in for Steve Rhodes. Our man Steve, he is a little under the weather, but we will be back with you. Right now, we get the S&P futures off 3. We get the NASDAQ down 5. Gold's off 450. And this is one heck of a settlement. So check this out. Bank of America. So this just came out literally a minute ago. Bank of America, the second biggest U.S. lender by assets, agreed to pay Fannie Mae $3.6 billion to resolve home loan repurchase claims. The lender will also pay $6.75 billion to repurchase residential mortgages sold to Fannie Mae. Bank of America said in a statement this morning. The deal will substantially resolve outstanding claims for compensatory fees between the two companies, according to the statement. Fannie Mae, Freddie Mac, and other buyers of mortgages have demanded compensation for loans created by the Countrywide Financial Corporation, which Bank of America acquired in 2008, claiming the loans were based on flawed data. So what this is all about, folks, is that when a bank or a mortgage broker flat out sells into the marketplace, inside that contract, what they're saying specifically is that there's no fraud involved. It's really what it's worth. And so Bank of America, Fannie Mae, Freddie Mac were going back and forth since 2008 on all of these. This number here is a tiny number in the whole deal. Okay, we're only talking about what, $11 billion. But bottom line is that it's going to free up, I suspect, Bank of America from a lot of suits that would continue in the future. The thing that is bizarre about the Bank of America Countrywide deal, and this is where you can see that the governance of Bank of America at that particular point absolutely did not do their job. Because picture this, the government really made Bank of America buy Countrywide. That's how this thing came down. So if you're in that situation, it's like, okay, good. Well, you sign off on everything that Countrywide did, and they didn't basically sign off on that. And so what they end up doing is that they end up buying huge amounts of problems that Bank of America really didn't have anything. Well, they didn't have anything to do with. So we'll see how all those loans, what they're going to do with those loans now. I can tell you this. Now, this is, if you're interested in the real estate market, we opened a fund. It's the Tiger Real Estate Opportunity Fund. You can find out about it on the front page of TFNN. There's a white paper you can read. Now, let me explain how this will affect what we do. We buy houses at the courthouse. So watch what happens here. And what's wild about this is that when I bought bankrupt bonds in 1980 to 1988, it was the same correlation. What I always tried to find is this, is that corporations, so first off, watch this, there was all the airlines then. So what ended up happening then is that you have the airlines, they have all these debts. It's much easier to buy those bonds once they've already marked them down. So every quarter I'd be calling the CFO saying, hey, you want any bonds? You get any bonds you want to sell? You want to sell? Sometimes they would, sometimes they wouldn't. Bottom line, though, once they're marked down, bang, bang, bang. Buy them like big time. What you're going to see in this deal here, because what does end up happening, the way we do our research, we know exactly what's coming at us 4 months out, everything that's coming at us, meaning what's coming on. And what happens is this, and we've been doing this now almost over a year. We have data from over a year as to what is being bought, meaning investors, banks, and so forth. So what happens is this, is that this deal here, what this deal is going to do is that you are going to see more Fannie Mae and Freddie Mac, when they buy every single one of them. They don't, let's picture this. Let's picture a house is even worth $100,000. They get a $300,000 judgment on it. They just bid $300,000. That's how it works. That's going to change now. The reason that will change is because the write-down will be done. And what ends up happening, they let a few of them go, but the few that I know they do let go is that it's just a total wipeout, or the write-down's already there. So when the write-down's already there, it's going to get interesting here. See, it makes no sense for them to hold it anymore, even with the same with Bank of America. What has also happened in this business is this, is that the MERS system, what the MERS system is this. The MERS system is where they put all these collateralized mortgages. Sometimes what ends up happening is that the bank doesn't know still who owns the property. So when it's an aspect, they don't know, they just buy it back. The MERS system will buy it back, and I've seen them buy it back. Let's picture this. I've seen a $100,000 house. They buy it back at $300,000, okay? They turn around, and they'll sell the thing that, 3 weeks later at $125,000. They're just trying to figure out, okay, who owns this? This is Tom O'Brien. This is TFNN. Don't forget, folks, at TFNN, we broadcast each and every trading day, live content, 9 a.m. to 6 p.m. Eastern Standard Time. You get all that content at tfnn.mobi. You stay right there, folks. Coming back with the opening bell.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, man, Mr. Steve Rhodes. We'll be back with you. He's a little under the weather. Right now, what we have the Dow Industrials opening down 64. NASDAQ's off 15. S&Ps are off 3.5. We have gold down $1.40. Oil is down 39 cents. You get bonds up 7 ticks. King dollars up 5 ticks. We'll see where this whole baby's rocking and rolling. What we do want to do first, we're going to go over to Apple. What does Apple do out here, folks? Okay, Apple gaps down 5 points. 5 points is not a huge amount, but this is what we have. You're at 522 on Apple. Now, there's two separate swings here. She's going to go after the 509. The 509 is where she went topside from on December 31st. That the volume there is 23 million. So your correlation is that, okay, are we going to do anywhere near 23 million? Volume-wise and price-wise, is she going to get down there? That's where that shakes and bakes. We go look at the NDX 100, and right now, inside the NDX 100, we're down $12. Here's what is putting strength into the NDX 100, and here's what is putting weakness into it. We got Amazon, Micron Technology, Facebook, and Gilead Science. That's putting strength into it. Weakness, Baidu.com, AMAT, Yahoo, and NVIDIA. Let's go over to Baidu.com first, because Baidu.com, folks, okay, has a long way to go down. Now, right now, you're only off $4 on Baidu.com. What we have done with Baidu in the last 6 months is that we went from a price point of 131 straight down to 87. There's a counter trend bounce. We'll see what kind of juice on the way down that this wants to get. On a monthly basis, this chart is an absolute mess. I mean, big time. You know, it's under that actually 100.95. You stay under 100.95, that thing has nothing in it. Period. I mean, I'm talking about nothing down to $37. So it is not only a large number, it's a dramatically large number. We go over to the Dow Industrials. We take a look at the Dow Industrials. Dow's down 61 right now, and this is what's happening in the Dow. What's putting strength into it is Hewlett-Packard, Intel, Bank of America, and Marvell. What is basically putting weakness into it, which, of course, in this case is heavier, is Disney, ExxonMobil, Coca-Cola, and Cisco. Let's go over to Disney first. We'll take a look at Disney. Okay, so Disney's sideways. Coca-Cola, you know what this is going to be, even though IBM's not showing up? Let me go to IBM. See, IBM's the largest weighting. IBM, yeah, there she is. Now, this is interesting. So watch how this works. When I just brought this up, point move-wise, this doesn't make it, yeah. Well, point move-wise, IBM wasn't showing up. But weighting-wise, IBM's only down $1, okay? But because of the structure inside that weighting, this is what is just hammering this thing. And we'll see how IBM gets back inside. IBM right now is at 192.82. This is going to get into 191.68. Today, we'll see how it gets into that area. Yeah, 191.68. How we get into that area is going to be crucial, folks, because what you're going to see out here today is this. Any and all expansion of volume is going to basically say that, hey, it was a false break topside, and we're coming downtown. And it's going to be the NASDAQ that basically will give a signal that, number one, we have an expansion of volume on the way down, or, you know, bottom line, we have no volume on the way down and wants to go for its highs again. You know, that's going to be the correlation out here. The reason I'm saying that, of course, it's all because of Apple. You know, this Apple deal, folks. Now here, this is what's wild. So Apple's down $8 now. But Apple is also the largest weighting inside the S&P. So let's go over to the S&P for a second. We'll take a look at the SPY. So this is what we have with the SPY. The SPY is only down 67 cents right now. No big deal. You get 6.3 million shares. The SPY out here today, let me just see something. Okay, so this is what you have on a 10-minute chart. Okay, first leg down on the SPY is 14 million. Now, that's a good one. And the reason I'm saying it's a good one is this. Well, good is perception. What I mean is that means that the SPY wants to go lower today. And this is why. On Friday at 15:50 hours, as we went topside, we were going topside with 13.6 million. Well, your first leg down this morning is much more than that. Your second leg down, which we're on right now, we're at, let's see, this is where this gets wild. So I get 9:38 Eastern time. You're going to finish at the low end. So the SPY right now wants to go after 145.38. Right now we're at 145.68. That's the way this baby is shaking out right now. So today, I suspect the market's going to do a lot of talking, a lot of walking, and a lot of squawking. That's what it comes down to. We'll see if we go over to the euro for a second. We take a look at the euro. The euro had tried to get higher a few different times this morning. Hasn't been able to do it yet. We're at 130.57. It looks to me like in the next 5 minutes we're going to be down to about this 130.50 area. Is that important? Well, it's important in the context when the euro broke topside this morning. It didn't really go topside, but at 8:50 a.m. Eastern time, it got over the swing point of 130.55. Now, it's right at that right now. As soon as you come back inside that, folks, what does that mean? Can't bust them up, you're going to bust them down. That's how this thing shakes and bakes. And, you know, we're only talking a few ticks, but what does happen inside a currency move, when we're talking those few ticks, meaning the 130.55, it gets back inside there, then what it puts game into is that it can come all the way back to 13017. And in that context, what that means is that the king dollar is going to go break topside. You'll see more pressure in the marketplace. The gold market out here, I can tell you, this is going to be a trip watching this thing shake out today. The reason being, if I go to Rango Resources first, what Rango should not have done if this was going to be a consolidation and stayed in place, it's under its all its swing points now. Friday, you came down into the swing point, had lighter volume, but the volume still to expand. It can't hold price this morning. You're only down to $1.37, but Rango, let's put it this way, I didn't want to see Rango reject the 100.68 if, in fact, and we were waiting for that to see whether it was going to, well, we knew it was going to test it. We were waiting to see, can it hold it? It couldn't hold it. That's the whole gold market, by the way, folks. If we go look at Gold Corp is only down 26 cents right now, but she's going to go right after that 35.04 again. And it looks to me that this baby is just not done yet. It's just not done. And this correlation, no doubt, could be the correlation that we have that's inside that King Dollar. That King Dollar wants some heavy movement, man. And this heavy movement in the King Dollar is going to, when the King Dollar starts moving, we had 2 days of wide price spread last week with volume behind the move. We're at 80.63. King Dollar wants to go to 82 to 84. What King Dollar had done last week, by the way, folks, is that it had broken the downtrend that it had been in since last July. Now, on a much larger basis, that was a normal retracement in something that wants to go higher. On a shorter-term deal, man, that went through that trend line like butter, meaning on the way up. Okay, when you take something out like that and you go through it like butter, that's saying, hey, whatever vehicle that is, in this particular case we're talking about the dollar, that is saying it's much stronger and has a lot more to go. Some of the large caps out here, we have ExxonMobil down $1.05. You get Coca-Cola off 50 cents. Oxy's down 47. Honeywell is off 5. We get Big Blue down $1.36. Walmart's down 22. Intel is up 14. Let's go over to Microsoft. We'll take a look at Microsoft because we know when we're first looking at Microsoft. Yeah, Microsoft, okay, so she's flat right now, and this is really dangerous, and this is what it is. The swing points, the swing low of Microsoft is 26.26 or 26.74. She's going to go after this today. She's going to go after it, and we'll see whether she has any juice going after it. Right now, you get 4 million shares traded. It's 46 million. We go over to Amazon. We take a look at Amazon. She's going after the highs. Amazon's saving the index 100 right now. Right now, we're actually over all the highs. Amazon right now is at 266.26. Your swing point out there is 264. Volume characteristic is 3.6 million. And Amazon has juice. Amazon has 860,000 shares traded in the first 5 minutes. So that's real juice on that move topside. We take a look at AMAT. Let's go take a look at AMAT. Yeah, Amazon is number 2, putting juice into the NDX 100. Let's go to number 1, which is Micron Technology. Micron's up 18 cents. And what is she doing? Let's see. Okay, so we go to a monthly. Well, Micron's still in a consolidation. That's all that's happening with Micron Tech. There she is. Okay, the banking sector. Let's go over to the banking sector and we'll take a look at the banking sector out here. Right now we have J.P. Morgan Chase down 18. Bank of America is flat. Wells Fargo is down 4. Citigroup is down 20. Inside the energy sector, ExxonMobil's off $1. Chevron's off $1. Schlumberger's flat. ConocoPhillips. Apache's down $2.40. That's a big number. Let's go take a look at APA and see what's happening with good old APA. Yeah, she can't get out of her way. She's down. She's down good. Oh, I know what we want to do. Well, let's go over to the shippers. The shippers had a huge day, folks. The shippers we have to absolutely wrap our head around. So if I get dry ships up here, do not buy these yet if you're not into them. Do not buy them yet. Bottom line, though, on pullbacks, we're going to want to be all over these. They absolutely came off that bottom with conviction. EXM and all these stocks, folks, whether it's pennies or $1 or $2. And these stocks, no doubt can move. What I will do this afternoon from 4 to 6, I'll get the Baltic Index up, and we'll start wrapping our head around rates. Because what happens inside the shippers is that the rates that they get each and every day go up and down dramatically. Now, what they have done for the past 3 years, actually, is that they have gone down dramatically. And I'm talking about going down from the tune of $133,000 a day to zero. That's pretty intense. Now, as they start going back the other side, well, you know, the shippers can basically make some money. Let's go to Paul in Claremont, Florida. Hey, Paul, what's going on?
Hey, Tom, good morning.
How you been, man?
Not bad, yourself?
Cool, man. Good.
What do you see with my Melco Crown here?
MPEL?
Yeah.
MPEL. Okay, so let's see. They develop, own, and operate gaming, casino, and entertainment resorts. It's a high out here today. So what? They do business in China? Is that what this is?
Yeah, it's all Macau, 100% Macau.
I see.
Yeah, and I had a sell in around 1950, but I just canceled it. I'm waiting to see what happens.
Okay, so they take in $1 billion. It must be $1 billion Hong Kong a quarter, I think. Okay. So, okay, let me pull this back a little. You've had quite a run, that's for sure.
Yeah, no, it's from they tanked it a little while ago, brought it down one day about 10% about from 1550 down to 1395. It's been running since then. Goldman put them on the conviction buy list Friday, but that's the kiss of death in my mind.
Yeah, no, that means they're pushing it out to someone.
Yeah.
You know, I guess what you have to do with this one is make sure that whenever they're coming out with an announcement, you don't want to be in this stock. I can tell you that.
I know. I've gotten trashed twice on it already, and now I'm up real big. So I figure once it crosses maybe 1910, I'll put a trailing stop on it or something.
Yeah, what the problem is, though, you know what the problem is? Even with a trailing stop, what happens is that you just wake up in the morning and it's down. Do you know what I'm saying?
Oh, yeah, I see what you mean.
It's a gap away. That's where this, you know...
Better just to sell it then, huh?
Well, no. What you can do, sell enough to get your principal back. Because this does want to go down to $16.15. That's where it wants to go. But that's not the end of the world if you got your principal back. You know what I'm saying?
Oh, I understand.
Because it's real.
I want to get out of it, though.
It's real to that point. Yeah, but it's like you don't want to give $3 back when...
Well, that's it, you know.
Let me just pull this back a little bit more.
I mean, it's had a real good run.
No, listen.
I kept putting in sells from like 1695 up, but I keep canceling. I said, no, it's still too strong. It's still too strong. Let it just go, and I'll probably just dump it in another quarter or so if it gets that high.
Well,
and just leave whatever's left over can stay on the table. I really don't care because I made a lot of money on it.
Yeah, that's a good way to go, man.
But Goldman does that, don't they? They hype it.
Well, it goes both ways. What does happen is this, is that when they put it on their conviction list, that is a big deal, and there's plenty of people that will buy it when it's on its conviction list. That's the first part, right? The second part for any and all broker-dealers, when they are pushing their brokers to sell a stock, okay, they have something on the other side. The sickest part about the broker-dealer industry, folks, is that they take their own salespeople to push the garbage out, which is just amazing. But that's how it goes, man. So,
right, so I mean, they make the markets in them, right?
Yeah, they make a market in them, yes.
Yeah, so, I mean, they're telling you what they want.
Well, it's not, I've seen plenty, what does happen is there's plenty that are on Goldman's list that, yeah, will run a lot higher, too. There's not one of these all or none. Do you know what I'm saying?
Yeah. All righty.
Okay, man, have a great one. Thanks for the call. Have a great one. Have a safe one. Right now, we get the Dow Industrials are down 66, NASDAQ off 13, S&Ps are off 6. You stay right there, folks. We're coming right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We have the Dow right now off 74, NASDAQ off 16, S&Ps are off, let's see, where are we? She's off 4.5. The DAX is off 46. You get the FTSE off 23. Gold is down $1. We have bonds up 2 ticks. King dollars up 15 ticks. And if we go to the Dow Industrials first, we take a look at this baby. What we have is this. Let's see what we got. So when we start talking ranges, folks, the Dow right now is at 13,364. And if you, well, right there, what a trip. Okay, so this is what the number is. You close inside 13,365 today, we're going right down the other side. Got to be a false break top side. Pretty amazing, actually. Because what we had is this. You got to remember something, that last Monday and Wednesday, 2 huge strong days. You had the wide price spread. On Wednesday, the accelerated volume. In the context of taking your swing point out of December 18th and 19th. You did not have the volume inside the aspect of how we came down from September 14th, that 125-point ABC A to B on the way down. Okay, so right there, that's the number. It's 13,365. We go over to the S&P. We'll use the I'll use the cash S&P right now. So inside the cash S&P, what we have is this. Now she's still above it in the cash S&P. The cash S&P number. We're at 1458.69. It's 1448. So the cash S&P has quite a way to come back. Now, NASDAQ, different animal. NASDAQ basically is not even there. Okay, the NASDAQ, let me see. Well, actually, no, the NASDAQ's there. Okay, so this is what you have with the NASDAQ. NASDAQ, the composite's down $16. To get back inside the lower range, you actually have to come back another 24 points because that lower range is 3061. Now, what the NASDAQ has done is this, is that the NASDAQ couldn't, the retracement on the NASDAQ was much weaker than the other indices. That's the first part. The second part is that you get a close in the NASDAQ today of under 3083, and what that would do is that it hasn't even held the first swing point as it broke topside last Wednesday. So what happens is this, folks, is that when you break topside or downtown on a gap, that gap acts as the same as a swing point. And all the swing point is it basically a change of direction. But what should happen is that the NASDAQ should be able to hold that the first time down. What ends up happening is this. Picture, you get lots of strength. You're going up. When you have something like that, when you come back the first time, most of the time you're always holding it. If it can't hold it, that's going to be a situation that the market is releasing a huge amount of information. And what the market tends to do is this. The market can release more information, which what I've seen, on counter trend bounces than on the actual movement itself. That's my take, and that's how it seems to shake out. If we go over to the euro just for a second, euro's having a tough time holding onto a little counter trend bounce up here, meaning a bounce on the way up. Right now, we are at the 13055. And as I was saying a little bit earlier, that number, that 1.3055, is an important number because once she's under that number, game is all the way down the other side, which is pretty amazing, you know. So tick for tick, she's held there the last 20 minutes. She came down the first time, she came down to 1.353. The second time, she came down to 1.353. Just rejected it both times. It's the 1.3055. Now, you stay right there. Well, actually, for the next hour, folks, I'm Mr. Steve Rhodes. He's going to be back with you. This is going to be a replay of this hour, next hour. But then we get live Basil, Larry, Daryl, David, Ken Shreve, myself. Have a great one. Have a safe one. Look forward to speaking this afternoon, folks. Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.